welcome back to another market update for the month of June. And with June, it means that winter is officially arrived. As we rug up and spend more time indoors, it is a perfect time to get your financial house in order as another financial year draws to a close. And what a year it has been.
Reached a new record high, boosted in the large part by miners and oil stocks and banks, hitting 7,200 mark. We've seen the Australian share market perform well this month due to global rotation from equity markets into energy, financials, resource, such as copper, iron ore and industrial metals, and out of that companies. The Aussie market is in its 8th straight month of gains, the longest monthly winning streak since the ASX 200 rose for 10 straight months between August 2006 and May 2007. The catalyst actually appears to be, if you believe it or not, the Victorian COVID lockdown. The argument is that the new outbreak will kick Australians out of the complacency of vaccines and everyone getting vaccinated, the ultimate greater benefit for the Australian economy. If you think about it, the lockdown is actually good for us. In our view, this rotation is likely to continue for at least 12 months as bond yields rise and we experience a strong recovery in the global economy. As this happens, the relatively appeal of value stocks will rise and the expense of more growth tech stocks, and we'll see investors take profits on their gains over the last few years and reallocate those sections in the market. Most striking has been the sheer resilience of the Australian economy, share markets and the people. It's easy to forget the pandemic is still raging across the world and the unemployment rate seems to normalise near pre-COVID levels and the GDP is solid. Overseas, US share market is battling a rising spectre of greater inflation, which has not benefited their mega tech companies' growth-focused benchmarks, such as the Nasdaq. European share markets have rallied slightly higher, also struggled with direction in the pandemic-induced business conditions. In COVID news, the vaccination track has been 1.86 billion doses of the vaccine delivered in 106 countries over an average of 32.2 million a day. In the US, 295 doses, and that's at an average rate of 1.3 million a day. In Australia, the latest vaccination rate has been 87,562. At this stage, it will take another 13 months to cover 75% of the population. US infection lows, as the Indy 500 has an attendance of 135,000 people, and there would be vaccination jabs available there. I thought, wouldn't it be handy if the vaccinations would be at Bunnings? Japan is reportedly considering mandating and vaccinations for spectators at the Tokyo Olympics, and the UK government officials have set to ditch the potential plans to force Britons to show COVID passports to be able to attend mass events. Back to the local economy news. In May, was dominated by the federal budget and better than expected economic data. Australia's budget deficit is smaller than expected, just 6 months ago at 177.1 billion in April. This was underpinned by rising iron ore prices, up 22% for the year, and higher tax receipts for more confident businesses and consumers. The RBA has decided to maintain its current policy settings, including the target of 10 basis points for the cash rate and the yield on 3-year Australian government bonds. In its policy statement, reaffirmed its view of a better expected economic recovery, and a view which has led the higher expectation of today's GDP number. The NAB business confidence has gained 26 points, and the business conditions also gained another 32 points, hitting the ratings of record highs in April. New business investment rose 6.3% in the March quarter, the biggest quarterly lift in nearly 9 years. Housing construction is going gangbusters, up 5.1 in March quarter, while renovations were up 10.8 thanks to low interest rates and government incentives. Retail spending is also recovering, up 1.8% in April and 25.1% on a year ago. The ANZ Roy Morgan Weekly Consumer Confidence steadily May to a 19-month high to 114.2 points, well above the long-term average. As a result, the pickup in economic activity, unemployment fell from 5.7 to 5.5% in April. CoreLogic Home Value Index of national home prices rose by 2.2% in May to a 10.6 a year. It's actually the strongest annual growth in almost 11 years. In response to all this, the Reserve Bank lifted the economic growth forecast 9.25% for the year to June and 5.75% for the calendar 2021. If realised, this would be the strongest growth in years, a bit rising out of last year's COVID recession. The sticking point remains wages. Wage was 0.6% in the March quarter, but just 1.5% on an annual basis. This is below inflation. The Aussie dollar finished May at around 77 US cents after changing from 79 US cents earlier in the month. In the Cofkin bond growth portfolio, we've seen a gain of 0.63%, with nothing really happening from the top 10 holdings. Thanks for tuning in, and best wishes, all Victorians.